Hey there! If you're new to investing, you've probably heard the term stocks thrown around a lot. But what exactly are they? Let's break it down. Stocks represent ownership in a company. When you buy a stock, you're essentially buying a small piece of that company. This means you own a tiny fraction of everything the company owns, from its products to its profits. Pretty cool, right? Now, companies issue stocks to raise money. Think of it like this. Instead of taking out a loan, a company sells off little pieces of itself. In return, investors, like you, buy these pieces in the hopes that the company will grow and become more valuable. When the company does well, its stock price usually goes up. This means the value of your investment increases. Conversely, if the company struggles, the stock price can go down. So, investing in stocks comes with its risks. One way to start investing in stocks is through a brokerage account. This is a platform that allows you to buy and sell stocks. There are many online brokers out there, and some even offer educational resources to help you get started. Another important point is diversification. This means spreading your investments across different stocks or even other types of investments. The idea is to not put all your eggs in one basket. Lastly, always do your own research. Don't just follow the hype. Look into a company's financial health, its competitors, and its growth potential. Knowledge is power when it comes to investing. And that's a quick rundown on stocks. Remember, investing is a journey, not a sprint. Start small, stay informed, and over time, you'll get the hang of it. Happy investing! All right, if you found this helpful, make sure to like and subscribe for more beginner investing tips. See you next time!